Hello, welcome back to my channel. Today in this video, let us discuss golden rules of accounting and three types of accounts. We need these three accounts as well as golden rules for passing the entry in the journal. So we'll start with three types of accounts. Now let us discuss the types of accounts with golden rules. There are three main rules of accounting for three different accounts. So we have three types of accounts. First is real account, second is personal account, and third is nominal account. So first rule for real account. Real account rule is debit what comes in, credit what goes out. It means the asset or goods which comes into business or inside the business, and credit what goes out means credit asset or goods which goes out of the business or outside business. Next type is personal account. Personal account rule tells debit the receiver and credit the giver. It means debit the person who receives goods or money from another business or individual and credit the person who gives goods or money to another business or individual. Now next is third account is nominal account. Nominal account rule is debit all the expenses or losses, credit all incomes or gains. It implies debit all expenses or losses relating to business and credit all incomes or gains related to business. Now let us talk about real account. Real account is related to goods, assets and property, etc. So real account includes all goods, then assets in the sense all fixed assets such as land and buildings, furniture, fixtures, plant and machinery, etc. Then it also involves current assets such as cash and also intangible assets such as patent, trademarks, copyrights, etc. So example for real accounts are cash, land and buildings, plant and machinery, furniture and fixtures, patents and trademarks, etc. Let us consider below transaction to pass journal entries. Uh, Mr. A, sole proprietor, has the following transaction. Let us consider this particular example to pass journal entry. He deposits cash into bank rupees 20,000. So in this transaction, there are two accounts involved. One is cash account, another is bank account because Mr. A deposits cash into bank. So cash goes out of the business of Mr. A and bank receives the cash. So two accounts it include. One is cash account, another one is bank account. Cash account is a real account, bank account is a personal account. So cash real account tells debit what comes in, credit what goes out. So from Mr. A, cash goes out of the business. So cash is credited. So who is the receiver of cash? Bank account. So by bank account is personal account rule is debit the receiver, credit the giver. So bank receives the cash. So the entry for this particular transaction is bank account debtor to cash account rupees 20,000 in both the sides, credit column and debit column. Now let us discuss next topic, personal account. A personal account is an account of individual firms or organizations. So it is an account of individual firm or organization. Normally this personal account is relating to parties or persons. So examples are A's account, capital account, drawings account, bank account, debtors account, bank overdraft, prepaid expenses, outstanding salaries, etc. So personal accounts can be classified into three types. First is natural personal accounts, second is artificial personal accounts, and third is representative personal account. First category is natural personal accounts. So it includes accounts of human beings such as A's account, B's account, etc. So it includes natural or human beings account. So we have to consider the person's account such as A's account, B's account or any other person's account. Next, second is artificial personal account. It includes entities which have a separate legal entity in the eyes of law, such as bank account, ABC limited account, etc. So, artificial persons are not human beings but can act or work like humans. They have separate legal entity in the eyes of law. Next classification is representative personal accounts, accounts of certain person or group of persons. Example, amount paid in advance or payable to landlord, which is normally we can call it as prepaid and outstanding rent, etc. So, in this example, uh, we can consider like outstanding expenses. If you consider outstanding expenses, it represents the outstanding to a person. For example, we'll consider the example of outstanding expenses. Outstanding expenses which are incurred during the current accounting period and are due to be paid, or here payments are is not made to a party. So it represents outstanding amount to that party. So it is considered as representative personal account. Now, let us discuss the third type of account, nominal account. Nominal account are accounts related to and associated with losses, expenses, incomes, or gains. So, nominal account rule is debit all expenses or losses, credit all incomes or gains. Example for nominal accounts are salary. Salary includes both received and paid, then wages received and paid, then purchases, sales, then commission received and paid, discount allowed and received, then carriage inwards. Carriage inward is nothing but shipping or handling cost or charge for bringing goods from suppliers to a business. Then depreciation. Depreciation is nothing but continuous or reduction in the value of an asset due to continuous usage. Then bad debts, etc. Let us consider below transaction to pass journal entry. Here the transaction is salary paid for cash rupees 12,000. So in this transaction, accounts involved are two. One is salary account, another is cash account. So salary account is a nominal account and cash account is real account. So nominal account tells debit all expenses or losses, credit all incomes and gains. So for the business, salary paid to the worker is a expense. So salary account is debited, then cash goes out. See, in the form of salary, cash goes out of the business. So real account, cash account is real account. Real account tells debit what comes in, credit what goes out. So cash goes out of the business. So the entry for this particular transaction is salary account debtor to cash account. In the next video, we are going to discuss some other accounting topics. Please like and subscribe my channel. Thank you.